What's going on, y'all? Welcome back to the Mining Pod, this week's news roundup edition with your boy Colin and your boys Charlie and Matt. Gentlemen, how are we doing today?
Oh, I'm fantastic. Bitcoin currently is 98, maybe 99,000. So by the time you're listening to this, we will know whether it hit 100K in between this podcast and the dropping.
Yeah, we might do a little breaking news segment if we rip past 100K during this roundup. But price aside, we've got a pretty stacked lineup for today's roundup. We're going to be going over ASIC prices from the Mining Pod newsletter that we sent out this week. We're going to do an update on the Russian mining restrictions for certain regions given energy shortfalls during this ensuing winter season. A pretty cool story about Hilcorp, an oil and gas company piloting mining in Alaska, an off-grid oil site mining pilot. Pretty interesting. We're going to go into an update on AI pivots from Bitcoin miners, a few that have slipped through the crack in our coverage. We're also going to be looking at the multi-billions of dollars worth of shorts open against mining stocks. And then for this week's Cry Corner, a delicious update that Gary Gensler will be resigning on January 20th next year. But before we hop into it, a quick word from our sponsors.
Are you a retail or institutional investor interested in Bitcoin mining companies? The Miner Mag brings you free data and analysis from all major NASDAQ-listed Bitcoin mining operations to know who stands out. Check out visualized metrics and data-dependent stories at theminermag.com. Thanks for listening to the Mining Pod. Want more? Subscribe to our main feed on Apple, Spotify, YouTube, or wherever else you get your podcasts for another weekly show on Bitcoin stocks. And check out our newsletter at miningpod.blockspace.media today.
All right, gents, we're back, and we're going to start off per usual. And I did not say this during the intro, but people get it. We do this every week with this week's difficulty update. So, Matt, I'm going to kick it over to you. Let me get mempool.space pulled up. Matt, what are we seeing?
Yeah, we got an estimated retarget coming up December 2nd. At the time of recording, we're about 1,500 blocks out. Times are good right now. Times are good. We have hash price sitting at just over $60 per petahash per day, which has been maintained over the last about week and a half, which is really strong, a really strong level since the Bitcoin halving. Basically, the highest it's been. We talked about this a bit last week, outside of a couple major fee spikes. And miners are, going to enjoy this for, until an estimated December 2nd. Blocks are coming in pretty quick right now. I think quite a bit of machines might have come online. So the next adjustment is, as of right now, subject to change, of course, a little over 9% increase, which will be significant.
Pretty big.
But that's the outlook for the difficulty. Charlie, any expected fee spikes in the next couple week or so to impact this equation?
I mean, if you just look at the past 2 weeks, we saw transaction activity on Bitcoin pick up, driven, of course, by runes and runes mints, which then did reflect materially in like a 2 or 3 to maybe even 10x increase in fee rates, depending on which few blocks you look at. But we have seen a material increase in fees. And if history is to be an example, then after a Bitcoin price run up, we often see the beta assets and the assets on Bitcoin also heat up. So my finger in the wind says Bitcoin to 100K, so do secondary asset mints and activity on Bitcoin. So I would be long transaction fee rates as long as Bitcoin is going up.
Liquidity shifting to meme coins on Bitcoin.
It's a real mechanic now. You have to admit it.
It is. Well, it's it fits in with kind of normal market, normal, but you know what I mean. Typically during bull runs, Bitcoin rips, liquidity cycles into alts, liquidity sells from alts, goes back into Bitcoin, rinse and repeat until everything comes crashing down and everyone's poor, begging on the street, living in cardboard boxes. One thing to note, going back to the just difficulty really quickly, I want to just share this chart from our friends at Luxor and Hashrate Index. Bitcoin recently, our hash rate recently hit an all-time high on the 7-day of, looks like 776, 782 exahashes a second. Okay, so per what Matt said, hash rate is absolutely ripping right now. On the 3-day, it went as high as 815 exahashes a second today. And so, I mean, miners, as always, just relentlessly deploying hash. And this will probably not slow down, considering, like Matt was saying, hash price up, a decent amount. Still pretty thin margins, but if you got a next gen machine, you're feeling much more comfortable during this or after this price pop from Bitcoin.
815 is wild. When one zettahash?
Oof.
That was like the over-under prediction for a lot of people this year, and I'd be surprised if we hit it. But January, 1 zettahash incoming.
I think Q1 of next year, it's certainly in play. I mean, I would be a little surprised. Obviously, this assumes that Bitcoin is still elevated. If the bull market ends early, then we could see that not manifest. But if Bitcoin continues to rip to all-time highs in Q1 of next year, I would be shocked if we didn't exit it around one zettahash. Would be a great topic for a show once that happens. It's just an incredible milestone. So Bitcoiners all around the world rejoicing at how many cyber hornets are protecting their generational wealth. Okay. Anyway, now that we have that out of the way, we're going to hop on to this week's the first story of this week, which we wrote for the newsletter for the Mining Pod this week. ASIC prices rebound hard on Bitcoin rally. Not really anything groundbreaking here, right? I just wanted to give an update on the ASIC market, because obviously if Bitcoin's going up and hash price is going up, ASIC prices are going to follow. And some interesting tidbits here, unsurprisingly, from our sources that we talked to for this. We talked to Lauren Lynn at Luxor. We talked to Alex Dissinger at Kaboom Racks, and then Blake Davis at Blockware. And unsurprisingly, the S21 series is the most sought after currently. The S21 Pro, Vanilla S21, and S21 XP have been some of the most popular miners during this current rally. They're the most in demand, and their prices have kind of reflected that. They've risen anywhere from 5 to 10%, depending on the marketplace and depending on the minimum order quantity. Another interesting tidbit, though, from Luxor ASIC price data that was shared with me is that the S19J Pro month over month from when I wrote this was up like 30%. And so, this is kind of this cycle's S9. The S9 trade during the 2020 and 2021 bull market was very profitable for anyone who partook in it. But, S9s were going for nothing. They were being given away in the last bear market, and then they increased exponentially. I think at the peak, you could sell one for like $1,500 or $2,000, just something crazy. And Alex of Kaboom Racks thinks that he would not be surprised if S19J Pros sold for as much as $3K this bull market. Not financial advice. We'll see if that actually comes to pass, but kind of an interesting hardware trade that people have been talking about for a while as Bitcoin climbed to all-time highs. One last thing for this, in the light or the shadow, depending on who you talk to, of Elon Musk's perennial shilling of Dogecoin and his and Vivek Ramaswamy's Department of Government Efficiency, just an incredible acronym. I can't believe we live in a universe where there's going to be a government department that derives its name from the first meme coin. But Dogecoin miners like the L9 and L7 are going for crazy amounts. I mean, the L9, according to Alex on Kaboom Racks, is nearing like 20K. The L7, which was released 3 years ago, going for like 7K. So, nothing new here. The sun rises in the east and sets in the west. It's another bull market, and Dogecoin will not die. And it might even flip Ethereum this bull market. But that's kind of it for me on this one. Do y'all have any thoughts on this?
Yeah, I do have some thoughts. I mean, on the Dogecoin saga, what we're seeing is this hasn't really trickled into Western ecosystems yet, but other previous forks of Doge that have been discontinued, their mining, from over a decade ago, have been resurrected, and these things have not really been integrated at the holistic merge mining pool level yet. So you see forks of Doge, such as Lucky Coin and Bell's Coin, very popular in China, possibly even more of these coming, which use script hash. So that it's the same hash function, and it's not really reflected, I think, in like more conventional investors' minds, because one, they don't know what a fork is of a coin, and two, it's not like the pools that you would use aren't as like simple plug and play as they would be previously. But yeah, these coins are ripping, and the thing is, if we got any OG Bitcoin miners in the space, you might remember that like the proof of work shitcoin fork meta from like 14 to 16 or 17 was a big one, and then all the air got sucked out of the room for the proof of stake as ETH dominated crypto narrative. Well, now that Ethereum has lost its luster and proof of stake is in a little bit of existential crisis as a viable consensus mechanism, proof of work's back on the table. So we're seeing a lot of these Eastern degens spin up these old, ancient, formerly deprecated side chains and merge mine them. So not financial advice, but bullish on L9s.
And here's the Bell's coin hash rate. I mean, in August, I don't know if this is an error because it doesn't seem like it.
So it was more. It was just that. It was more. It just. It was this one. It was 2 or 3 pools that that kind of just did this on the side and manually paid out their clients. So it wasn't even really able to be tracked at the time.
All right. So, but it does look like we have some data in early August where it was at like 60 to 70 terahashes, and now it's up to above a petahash, which is just kind of crazy. So that's kind of an interesting secondary effect from all this.
Degen miners, look out! There are basically meme coins to go mine. My BitX folks learn script hash.
Or resurrect old SHA-256 coins. I don't know.
Yeah, my S9 will be humming away on Vertcoin or something like that. Actually, I don't even know if that's ASIC compatible. Who knows?
Today's show is brought to you by Digital Shovel. Digital Shovel is a leading manufacturer of modular mining pods as well as PDUs and switchgears. Unlike many other competitors, their product is designed and manufactured in North America with a complete UL inspection on the entire unit, not just individual components. Additionally, Digital Shovel is one of the most vertically integrated manufacturers of over 75,000 square feet of sheet metal shop, SMT and wave solder PCB assembly, as well as final assembly all under one roof in Toronto, Canada. Their price point leads the industry when compared to products with rates as low as $69,000 per megawatt for a complete data center with smart PDUs and switchgears. To learn more, visit digitalshovel.com.
Moving on away from the shit coins. Sorry if we offended anyone's sensibilities by talking about them this show. But moving on to the next story in our lineup. Russia bans winter cryptocurrency mining in Siberia, the Northern Caucasus, and occupied Ukraine. Matt, what's going on in Russia?
Yeah, so maybe the reason we don't hit 1 zettahash is what a lot of people anticipate or estimate as the second largest Bitcoin mining country. Russia is basically going to put on a ban. And what they're going to do is prohibit from, it looks like the very end of Q4, starting December 1st to mid-March, March 15th is when they say the restrictions here. Yeah, I mean, I think this is, I guess, a cautious approach, you might say, because of how much heating will be necessary for residents in Russia. And I think they're weary of the electricity consumption from miners. And so they're stepping in. Another note of seasonality of the times of old, right? Where, China, there was lots of seasonality between the wet season and then high cold power miners. And now we see a bit of seasonality in the demand response in Texas during for opposite reasons than Russia to cool homes. And now we're seeing a kind of top down looks like restrictions in Russia to heat homes. I don't know if it's going to be a long enough amount of time to where miners pick up and move, right? But I mean, if you're a containerized solution, maybe. But what do you guys think about this one?
It looked like, according to that, it was to March 2025. So whether or not it actually stays that long is kind of to be determined. But yeah, to your point, I'd be curious, like, are any miners grandfathered into this? Is the restriction wholesale, like everyone who's mining get out? Is it kind of just like moratoriums that we've seen in the past where they're not going to allot any new ones? I'd be really curious to see, obviously, the Russian-Ukraine war in the backdrop of this. The restrictions extend to Russian-occupied Ukraine, which I think is interesting. It's like, are there even any miners in that region? I mean, that's like the seat of a war that is very hot and has been going on since February of 2022. Or really, if you want to go back for even further to the, I mean, like 2014, I think, was when the fighting in the Donbass started breaking out. Anyway, kind of curious, and I like your point, Matt, about the seasonality. It'll be notable going forward to see how much the Russian winter will affect hash rate. I think we'll get a better idea of just how much hash rate is in the region. Some interesting statistics from that. The BitRiver CEO estimates that 1.9% of all of Russia's energy, or the 1.9% of projected power generation for Russia for 2024 goes to mining. That's roughly 2.7 gigawatts. The energy ministry estimates it to be about 1.5%. Hard to say which one is more accurate. Energy industry ministry probably a little more accurate there, but obviously BitRiver is very active in the area, so they would know all the major players. And another thing too, there was a recent tax levied against miners. There was a bill that had all of these provisions for how to handle crypto and Bitcoin under tax law. And the Russian tax authority is expecting about $2 billion in tax receipts from miners in 2024. Pretty staggering amount. Charlie, I don't know if you have anything to add to this.
Maybe we see. I'm always looking for like the new China wet season dynamic. So maybe we have the U.S. summer demand response. Texas is hot. Mining is off and on phenomenon, and then we have the Russia winter freeze. I think global weather and geopolitics will continue to drive seasonality of hash rate.
Well said. Speaking of seasonality, we're going to a place that's very cold, gentlemen. Oh, wait. Go ahead, Matt.
Sorry, I was looking up something while you're transitioning. I think you said BitRiver estimated 1.9 gigawatts.
1.9%. 2.7%. Yeah.
Did you say a gigawatt figure?
Yeah, 2.7 gigawatts.
2.7. So, well, it's not perfectly correct, right? It's just an estimate. But Cambridge has the network at about 20 gigawatts. So it's about 2. That's like 10% of, and nice. Like obviously that doesn't necessarily represent hash rate either. We don't know what machines are out there, but
right.
You get the point. It could be a pretty significant amount of the network. Anyway,
that's really interesting, and that to me gives an impression that perhaps Russia has the third largest hash rate share, because some people estimate China still having like 15 or 20%, which is pretty crazy. And I don't know how we really derive that. That's really kind of like finger in the wind spitballing, but that's wonderful color. So you heard it here first, folks, from the Matt Kimmel. Potentially 10% of the network hash rate in Russia.
China, by the way, easing some of their previous hostilities. That has happened time and time again in Bitcoin.
Yeah. It'd be really interesting to see. Interesting to see if they reverse that. I asked our guest on the Bitcoin Stock Show yesterday, Dr. Yue Yang of Bit Mining, whether or not he thinks there's going to be a complete reversal of the ban. He doesn't think that that's in the cards, but he did confirm that the restrictions in certain provinces have been eased, which, I said on the show then, and I'll say it now, it seems to me that it would be advantageous for China to allow Bitcoin miners to come back, because they are deploying nuclear and coal at a rapid clip. And it would be probably pretty beneficial for them to be able to use Bitcoin mining to soak up some of that energy and produce additional revenues before they have transmission built for that kind of stuff. But anyway, let's move on to a very cold place.
The North Slope of Alaska. So this is one of my favorite stories I've heard. I've not been dialed into the oil and gas and Bitcoin beat for a little while, but Hilcorp, one of the largest privately owned oil and gas producers in North America, is piloting a small but substantial 1.4 megawatt Bitcoin mine up in the North Slope of Alaska. The North Slope is the largest oil field in North America. And it's really interesting because from oil and gas, the gas up there is very dry. It's very easy to drill a well, and like these long, deep wells, which are typically more profitable to do because it's easy to acquire acreage altogether. It's just easier to drill a well up there from a deal flow and a capital deployment standard. However, your big challenge is transporting that gas to the market, which exists on the other side of the continent. So, like, this is the perfect scenario for stranded or economically stranded energy. And so, what we're seeing is Hilcorp is piloting they have a JV with a company named TA Infrastructure, I guess, from Texas. I'm not familiar with them. And they've filed a 4-year permit starting this month, November, extending to 2028, to pilot out this Bitcoin mine. And I think this is really interesting because this is a major company. And I don't know if they did a press release, but this is you can see this in the filings on the Alaska Department of Natural Resources. So I'm actually kind of interested because the way Alaska takes excise tax is as a percentage of like what that gas would sell for at market. And so I don't know. Yeah. So I actually think one of the more interesting technicalities is going to be how the production, either it's an excise or a gross production tax.
Right. Like is the tax based on the actual Bitcoin mine, the revenue from that, or the value?
It's gonna be related. Well, it's gonna be related to the gas, because historically, I actually don't know. Like sometimes they'll like run generators on site, and I don't know if that gas is taxed. So this is really interesting. Anyway, but they do have their finger in the wind to evaluate if this makes sense at scale. 1.4 megawatts means they're probably using a few just reciprocating engines. These are pretty standard for the oil field. But I like to see this. This is what we all know. And I will say, this is probably not flared gas. You don't really see much flaring up in the North Slope. And I think a lot of the narrative over like, what do Bitcoin mining and gas producers look like? I think flaring is a great narrative for the environment, but when it comes down to real economic trade-offs, the lower hanging fruit is gas that is economically stranded. So I think they'll find that this project will probably be a technical success, and then it's up to the market whether they feel if it's worth pursuing more.
How much do the conditions in Alaska factor into this, though? I mean,
I would assume a lot,
like an Alaskan winter would be brutal.
Yeah, that's one thing I don't know. I mean, you talk to the Canadian miners who do it up in like Alberta, like Steve, and they say that like if you recirculate the air and you have a particular like recirculation of the hot aisle back under to the bottom of the container back in, like you can maintain these. And the real risk is actually more if you get any downtime. And which is interesting because I think downtime is typically the greatest trade-off for mines in the oil patch, given that you're not buying from the grid. You're kind of dependent upon what could be fluctuating production on the well side.
Basically, the idea being that the downtime could be detrimental because your machines are turned off and then you have no apparatus for actually keeping the heat circulating. Yeah,
exactly. Yeah.
I wonder if they're talking to our boys at Upstream Data. I wonder if that's the containers that they're going to use.
That's probably what I would use. Those are tried and tested. Not an endorsement, but we all like Steve. And so,
yeah, 100%.
Yeah, he's got good containers for cold weather environments. So we'll see.
Matt, do you have anything to add?
No, well covered. I mean, a lot of oil up in Alaska, so maybe it sets a trend. We'll see.
Be interesting. Be pretty cool.
I think one of the other things is that it's been like a dirty little secret that some of these majors have been trialing this, but they did not want to be public about it. And it's not clear whether Hilcorp wants this to be public, but this is a public filing. And so this is a clear public. We got the numbers, we got the dates, we have details about it. That's significant, I think.
On that note, I wonder if now that, with the prospect of a Trump presidency and an all Republican House and Senate with a lot of crypto friendly legislators, I wonder if you'll see more things like this coming out of the woodwork of companies that were, behind the scenes operating these things or standing up pilots, being a little less shy, a little less diffident on their stances on Bitcoin and coming out and saying, yeah, like we've been doing this, because the stigma is like quickly evaporating. I think especially with this recent price run up, there's going to be much less reason to be, kind of reserved about these things or even be openly hostile against it. So
drill, baby, drill, and mine, baby, mine.
Drill, baby, drill, mine, baby, mine, nuke, baby, nuke. We are energy maximalists here on the Mining Pod. Speaking of energy, AI is still coming, and we're going to need a lot of it. This is a Yahoo Finance article from one Akiko Fujita entitled "Crypto Miners Double Down on AI Hosting for More Reliable Cash Flows." And the one that I wanted to highlight here, because I don't think that we covered this on past shows, and if we did, I'm sorry, then my memory is already failing me, and that's troubling. But Galaxy Digital is kicking Argo out of the Helios facility that they actually purchased from Argo during a bankruptcy proceeding, and Argo then used for hosting its machines with a Galaxy. They're kicking Argo out, and they are going to transform that into an AI and HPC data center a la Core Scientific. Interesting development. Probably one of the bigger Bitcoin, definitely one of the bigger Bitcoin miners to come out and public companies to come out recently announcing an AI pivot. Mike Novogratz, Galaxy Digital CEO, said it makes it a better investment than Bitcoin. It makes it a better investment than Bitcoin, certainly over a 3, 4, 5 year horizon. The data center play looks a lot more profitable. We've heard this time and time again. Bitcoin mining margins are thin and ever dwindling, and AI and HPC margins are potentially very fat if you skin the cat properly. One other thing that I wanted to point out here that I thought was interesting was comments from Jason Less, the CEO of Riot Platforms. I don't know if this is from a quote that he gave to Yahoo Finance or if this was from their earnings call, but he said that they have received multiple inquiries from blue chip AI companies looking to secure large scale power capacity. In most cases, the tech companies have offered to cover the capital costs involved with retrofitting existing facilities. Echoing what Novogratz said, it's consistent and reliable cash flow that is not subject to the volatility of Bitcoin, like the rest of our business, Les said in whatever interview they're drawing from there. So a few things from this that I find interesting. Riot has not indicated that they are necessarily interested in an AI pivot or an HPC pivot. They have not said that they are entertaining any of these offers. They've been very quiet on the AI front, not really making one stance one way or the other. They haven't been like CleanSpark, where Zachary Bradford is like, we're not doing this. We're going to stay Bitcoin mining. Stop talking about it. But they also haven't been like Core Scientific's team, where they're like, we're an AI HPC company now. We don't even consider ourselves a Bitcoin mining company. The other thing too, we had Reggie Smith on the Mining Pod for this week's show. And one of the things that he mentioned in one of his most recent reports was that he believes that Riot is probably the juiciest untapped opportunity for a acquisition from a hyperscaler or HPC company. Because Riot has this massive power pipeline with Corsicana. They're trying to scale it up to a gigawatt. They have all of the PPAs in place for this. They've done all of the paperwork and rubber stamping, and they're just building out the capacity currently. So the idea being that a hyperscaler could come in, purchase that facility, and then just greenfield a center or retrofit what has currently been in place. I think Riot stood up like 300 megawatts or so. I could be wrong about the total figure, but they've stood up at least one phase of Corsicana with immersion cooling. So anyway, those are just the takeaways from that article for me. Curious to see if what you gents think, if you have any color to add.
This is to be expected.
Mining is hard. People are thinking that they could ROI quicker with AI. It's happening time and time again.
I would love to see companies stick to a Bitcoin mining exclusive strategy, pure play strategy. I think if the entire industry does this flex model, then I'd get a little worried, but we still got some good pure play mining options out there.
There's an interesting kind of game theoretical concern here where it's almost like a game of chicken, where all of these miners are saying, we're going to pivot to HPC because the margins are fatter. And if enough of them do that, some of them are going to fail and fail spectacularly, and they're going to be out of the game entirely, including mining. So for like the Clean Sparks of the world or the Marathons who have said, we're not really interested in doing this, we're Bitcoin miners, they have a lot to gain if some of their biggest competition ends up pivoting. Then they have like all of the market share for hash rate. They're going to get a lot of the investor share as well. Their stocks should profit accordingly because they become the only games in town. I mean, like Core Scientific is kind of already making the pivot, right? Like we can almost assume that they, like in 10 years, I would be kind of shocked if they had much hash rate at all. If Riot also does it, and I'm not saying they are because they haven't indicated that they will, but if Riot somehow gets purchased by a hyperscaler, then you basically have Marathon and CleanSpark as like the two largest Bitcoin miners and bit farms. But I mean, in terms of like hash rate scale, like CleanSpark and Marathon are kind of in a league of their own alongside Riot and Corsair in terms of scale. I mean, they both have 30 exahashes under management. It's just an insane number, right? And if it almost becomes a winner take all at that point for the hash rate race, right? Because if you have all these miners pivoting to HPC, then you bring more to the table. I mean, the market's already super saturated with.
Look, I don't know much about AI and HPC, but you have a hot market with a ton of money trying to get in, with long lead times to have structural barriers to building out this said infrastructure on the timeline that you want, and everybody expecting crazy outsized returns. This sounds like Bitcoin mining in 2021.
Yeah.
And so I just...
But I would say even more fraught with uncertainty, because I think Matt pointed this out last week. It's like you have to establish biz dev pipelines to sell your compute.
Yeah.
This, this is not Bitcoin mining where you just, let them rip, point to a pool or solo mine. Like you've got to find a buyer for your compute. And, anyway.
Maybe the massive on-grid scaling to a bajillion hash rate and megawatt mining phenomenon is a temporary thing in the history of Bitcoin.
We will see. Analysts quote that Reuters cited in a recent article. They did not name these analysts. I feel like that's kind of like the experts say. But anyway, Reuters said that these analysts expect like 20% of the current mining capacity in the U.S. to pivot to HPC by 2027.
I could see that.
I could see it too.
Is that a good idea? Undecided.
Time will tell.
In the competitive world of Bitcoin mining, one name stands out: CleanSpark, America's Bitcoin miner. At CleanSpark, efficiency isn't just a goal, it's our standard. Our sophisticated facilities are built and led by expert teams who care about Bitcoin and the communities we work in. Scale, we've mastered it. Our large-scale operations have set us apart in the industry as examples of community-oriented building. Our track record speaks for itself. We navigate the complexities of the new economy with precision and with skill, continuously achieving operational milestones. Curious about how we do it? We invite you to discover the story behind CleanSpark's success at cleanspark.com.
Next story involves a tale as old as time in terms of market greed. 4.6 billion in outstanding shorts against the public Bitcoin mining stock universe. Charlie,
I don't know if there's a whole lot additional to say, but there are shorts piling up against Bitcoin miners. This makes sense. Bitcoin miners sometimes don't follow Bitcoin, but it's to the tune of 4.6 billion, increased 50% in the last 30 days, according to research firm S3 Partners. That's a high of the year. This particular piece also points out the obvious, which is this is risky. Bitcoin continues to go up. These miners probably go up, and you get a squeeze on these shorts, and then it tends to be reflexive on the upside. So, I mean, it doesn't matter how many times we have this conversation. You generally don't want to short anything related to crypto. This is kind of a longs business, and shorts consistently get blown out. Doesn't mean that it won't work, but like, I don't know why you would be shorting. There's too many great stories which demonstrate that you should not have shorted these things.
Yeah, I just, to me, it's like picking up pennies in front of a steamroller. It's like, I don't know who these people are, but I guess they're kind of assuming market fundamentals will change maybe, or they think the AI rabbit will change this as investors continue to chase that. But if Bitcoin's ripping, Bitcoin mining stocks rip. Like, this is not rocket science. They're proxies to Bitcoin. They're high beta plays to Bitcoin. They function similarly to other commodities producers like gold miners or oil producers. If the underlying commodity is going up in price, the market reacts and bids up these stocks. So unless Bitcoin takes a sharp downturn and the bull market ends early, I would be surprised whether or not that if this ends up being fruitful for these people. But more power to them, I guess. Okay, are we ready for the cry corner, gentlemen?
I've been ready for so
We'll get a drum
long.
roll. Matt, take it away on this one. The biggest news to hit the crypto industry in a hot minute, in a way. Gary Gensler
From the horse's mouth.
Dang. From his official Twitter, or X, excuse me. I was I'm kind of in the dark. This happened just at the time of recording, just a couple hours ago. So I heard the news, but I did not know how it was coming out. So he gives the exact date, quote, on January 20th, 2025, it will be stepping down as SEC chair. He goes on to write a thread. I don't know if you guys have more color on the thread, but I guess I'll just say before we get to that, I mean, this is something that I think across the crypto industry as a whole, investors, users alike are jumping up and down, clapping for. I mean, it's been no secret that Gary Gensler has not been very clear in his posturing and guidance from the SEC on crypto assets, and the amount of enforcement actions that have come from the SEC against the industry at large has mounted throughout the Biden administration. And so I think people are going to be pretty excited about this, interested to see who is appointed. I believe that's something that the Trump administration will do, and then Congress will vet and approve. If I have my processes straight, but someone can correct me in the comments. What do you guys think about this?
First of all, I think that everyone should go to this thread and just look at some of the comments. I just want to highlight a few of them here. Lawrence, a well-known crypto Twitter troll, fries in the bag, little bro. Some more on the nose ones that are a little less sophisticated, like a Photoshop face of Gary Gensler on a clown, kind of terrifying. Eric Voorhees chiming in, but who will protect the investors? Elon Musk saying, is it true that the SEC only works one day a month in the office? Some other ones that we won't necessarily say over air, but you can go read them. Pretty incredible Twitter thread. A few things to note. This is funny because he's getting ahead of the fact that he knows that he's going to be fired. Like, this is a way for him to save face.
This is the inauguration day.
Yeah, this literally January 20th is the day will be the day of Trump's inauguration. He said at the Bitcoin conference that on day one he's going to fire Gary Gensler. There were some
Gary Gensler, you don't fire me, I quit. That's what
exactly.
This is.
Exactly. And to Matt's point, we don't know exactly who will be Trump's SEC appointment. Some names have been floated, like Dan Gallagher, Robinhood's chief legal officer. SEC Commissioner Paul Adkins, Jay Clayton, who served previously in the SEC under Trump's last administration, and Richard Farley. TBD who's going to replace him, but just kind of to echo what Matt said, a moment of rejoicing for the entire crypto industry with this one.
It's about time. I mean, I think back to when Trump spoke at Bitcoin conference in Nashville in July, where he's kind of doing his normal bit of the people he doesn't like, and it's got mixed reactions in the crowd. And then he says, "And on day one, I'll fire Gary Gensler," kind of almost like tossing that out, and the crowd roared, and it clicked in his head that, oh wow, this is the talking point that resonates with these people. I don't know how related that specific moment is, but that was like probably the clearest signal I think the Bitcoin crowd and broader crypto crowd could give to the future key decision maker for the nation about their what they care about. So
there was like a triumvirate of policy points, or at least campaign talking points, I think, that really resonated with the Bitcoin crowd. It was free Ross, it was fire Gary Gensler, and it was Bitcoin strategic reserve. Now, some people are going to bristle at that last one because I do think that there is kind of a schism within the Bitcoin industry, Bitcoin community, or just people who follow it as to whether or not that's good. But I feel like those were three things specifically at the Bitcoin 2024 talk that Trump gave that, inspired raucous applause.
Yeah.
So, gentlemen, any final thoughts before we sign off for the week?
100K, baby. We've been doing this, all three of us. If you can look, me, Matt, and Colin have all been in this business, suffered through multiple bulls and bears. We've eaten a lot of shit, and we're finally ready to eat some caviar. So we'll see you guys at 100K.
Matt, final thoughts?
Yeah, I mean, you gotta enjoy the bull markets. So everyone should. This is the time. This is the time to eat cookies and bring it up to everyone who told you were wrong.
Yeah, and the favorite holiday for that is coming up, Thanksgiving. So to all of our U.S. listeners, we wish you a very happy Thanksgiving. I hope that you get to spend plenty of time with friends and family, and you get to dunk on that one uncle who told you that he can't buy clothes with Bitcoin or something, or that he can't eat it.
Well, tell him you still can't buy clothes with it.
But can't buy clothes with it, and you still can't eat it, but you can buy caviar with it. And with that, we wish y'all, to our U.S. listeners, a very happy Thanksgiving. I believe we will be taking next week off for this show, so we will see you the following week. Hope everyone has a beautiful weekend and enjoy 100K. Y'all deserve it. Take it easy, everyone.